Hello, hello. Welcome to April 27th. Capri is lead at 35%. There it is, 35% for Capri, which was lagging for quite a while, but now it's caught up, which is quite nice. It closes right here at 55.30, and we need it to 57.95. So that's approximately $2.60 and $2.60, and we're at 229. So two 2 days, we should be able to reach the ATR in a perfect trading world. And of course, nothing is perfect, but you can see how it goes up and down. But we have nice momentum here, so we just might be able to get that close above that 57.95, and then start moving into a dipper low, to which would be probably somewhere in here. The low is 52. Let's go ahead and bring this up. This is going to be a lesson on the dipper low, because when it's tiny, you have to look at for it. So here the low was 52.65, 52.57, 53.02. So there is our dipper low right there. That's our dipper low, and then we'll be looking forward to the opportunity of moving that stop to there when we close that third ratio here at 57.95. And now start locking in that profit at 35% or better. That takes us to ATVI. Now, ATVI is good because of the fact is it is a put. Yes, remember a couple of months ago, I was a little bit concerned because we just might be a little bit lopsided in our calls and didn't have any puts to represent anything for the downside. There is that talk and talk and talk. Corrections coming. We're too hot. I just run my scanners. That's all. The scanners will give me it. The best candidates will come up and play, and then from there we'll go and look at see what the loss leaders have to offer. So we're now here at the close of 91.60, and we need to get to 89.24. So that is 60 cents, dollar 60, another $2.40. So meaning the minus of $2.40, and then we are ATR. The ATR is at $2.12, so that's 2 days away. 2 days away with a nice push down and close below that 89.24, and then start locking in some profit here on ATVI. ATVI that's currently at 210 against a ode of 1243. Okay, let's go on now down to our AT&T, which was leading the pack for a while. And remember, the AT&T was quite interesting because of the fact is that it had an earnings report. Found out why this happened, and that was because it was AT&T, and I had mentioned it before. AT&T, who owns Warner Brothers, who owns HBO, and they're very heavy into their streaming, apparently has gotten the attention of the market and increasing customer base, and this result had this big gap. Now it's giving back a little bit of territory, but we also have a nice doji. We have down here a small hammer doji right there, also known as a spinning top. So the could be that we would maybe have maybe be some support here, and then push it right back up, and you see if we can get that close above that 31.44. We got close before, we crossed it, didn't get able to hold on to it, so maybe the third time's a charm. Review also too the exit rules here. Let's do that. Ratios, a 3-to-1 ratio. So this is we are going for with our 3-to-1, and then close over the third ratio, which is right here. We start looking for a dipper low. We get the ROI 100, which we witnessed in the last couple of exits. Last bar low, and anything at 105%, which happened with us on Adobe about 2 weeks back now, and anything above 105, we go to last bar close and get the exit. Rule number 5: when we are less than 60 days to expiration, dipper high or dipper low according to what direction. So what that means is we are this AT&T. And today's lesson is the 60-day ratio to 60 days to expiration exit rule, and that is right there, June. So we are less than 60 days away from expiration. We now got to start looking for the exit. So the first exit that's applied is the dipper high, dipper low. So right now we're right here. We're anticipating that tomorrow, if we can get a high here on the right side, we can come up here for our dipper low on T and start looking towards working towards an exit. Now, what happens when we get to less than 30 days? We're still not out of the trade, but we're 30 days away from the end. It is last bar low or high. This will be a lot in this situation. It'll be a last bar low to get out of the trade, and that's what's going to be looking at last bar low to be getting out when we get less than 30 days. If this trade has not exited, most of my trades exit in the first 30 days. Sometimes things don't work out the way it should, and it lags on. Every situation, condition you run into, you have to know your exit. Remember the story I told you about I had to take one course when I was working to get my degree in producing for television production. We had to take one pre-legal class for the semester. Just it's a night class at the junior college, and the professor walks in and he says, doesn't even introduce himself. He just says, "What is the first most important thing of a contract?" And everybody in the room, most of us were taking night courses because we were working daytime productions, and everybody's got it wrong. 30 of us, about 30 of us got it wrong. And his answer was your exit clause. Your exit clause is the one and most important thing comes first. Everything else comes after. So same thing here applies to trading. You have to know your exit clauses, there they are, before you get into a trade to know how you're going to handle it. This is what training is all about. You don't panic in the situation. So that's what happens. So rule number 6 might get ignited in here, and that if we get less than 30 days, we'll be looking for a last bar low or last bar high according to the direction of the trade. With that said, let's go on to RTX. That was the lesson today. Was reviewing the number one thing of getting into a trade. Know your exit before you get into a trade. Now, going on now to RTX. That's at Raytheon. And Raytheon is right here. Here's Raytheon. Ooh, nice. Nice jumps here. I don't know what's going on, but nice jumps. There's our third ratio for the exit. Not exit, but to get the dipper low. And we have to log us on this contract. So we still have some good running time on it. But we got to do is get that close above that third ratio right there, and be able to then start looking for a lower dipper low. But look at no dipper lows here. We don't have any dipper lows, and we're at 24%. So it's going to be a waiting period, waiting for that retracement to come up to be able to do that dipper low on RTX. That said, that takes us now to CVS, which is the last of our positive territories. This one here, this is the third ratios here, and I remember this value is 80, and we have some pullback here, unfortunately, pulling down, but we are still our exit is way down here as the first ratio, so you can see that we still have some possibilities here that we might be able to go on to getting this trade good. With that said, then let's go ahead and now let's do the numbers for today. On where we stand with the SPY. So we closed at 68.19, 68.19 minus our 55.33. Divide that by the 55.33 which is our start point for July 1st, our start money. At a percentage of 23.22, and the SPY it is at 11.76. So they are running 11.8, and we are running at 23.4. 23.2. And with that said, we'll conclude today's report for Losers Become Winners with Capri at 35%. Thank you very much for stopping by and checking it out.